Thanks for tuning into the trade setup with me, Niraj Shah. It's not looking a very good picture, isn't it? Because the US markets had a bit of a rough day. NASDAQ in particular down about 3%. But it's not just NASDAQ, by the way, which corrected. All asset classes are lower, and I'll get to that in a moment, because the Asian markets today is not looking very pretty. Nikkei in particular has had a very sharp sell-off, though from a 4% downtick to about a 3% downtick as we record this at about 7:45. This is not looking very pretty, let's put it that way. Now, what's the global news flow? Nikkei plunged 4% or 3% after Wall Street plummet on weak US data. Crude fell over 4%, closes at the lowest level since December. Now, this normally would be good news, but this is happening because of the US data, which has looked very, very wobbly, as a result of which all the other asset classes, I mean, you look at what's happened to Bitcoin and Ethereum. Bitcoin down 4%, Ethereum down 7-8%. Risk assets worldwide have taken a bit of a backseat. US Treasury yields too slid, of course, as the investors wait slowing growth fears. Now, this is the crux of trade today. Just one small offshoot. We've been talking about the Boeing problems. Airbus seems to be having problems too. Yesterday I spoke about Cathay. Now we learned that Singapore Air is checking the A350 fleet as well. And Air China has scrubbed some flights as well. So there are some issues coming up with Airbus too. We didn't need this for sure. Okay, the implied open suggests a downtick of about 182 points. No surprise there really. It's not as rough, to be honest, as I had thought it would be. But be that as it may, 182 points is less than 1% really. So what's the trade setup? The global cues may lead India lower as well, but I think the dips could be bought into now. Whether it gets bought into 1% or 2%, I don't think I can tell you. I don't think anybody can tell you. So that's one thing to be kept in mind. But I still believe the buy the dips template for now from a trader's perspective stays intact unless the world worsens significantly. Because I think the other aspects, right, the fact that we are closer to rate cut cycle, even though people say that it's been priced in, or crude prices being lower the way they are, is all positive. Let's move on because, I think lower crude prices, etc., are a big positive. Now, pockets of froth may certainly see cracks. You might particularly see in the SMID space, which is small and mid cap space, or even in the SME space, some bit of rough weather in the session today, which may stay that way. So that's part one. But I think if you're looking at contra longs, OMCs are the best place really. Upstream may see some profit booking, but HP, BP, IOC, very well placed for contra upticks as well. So contra upticks, so that's to be kept in mind. I just think that, just look at what's happened at the small cap space or at the SME space. Did you know this? The BSE SME IPO index has surged by 131% CAGR. 131% CAGR, which is about 65 times over the past 5 years. This is where the true wealth or money has been created, but this is also where the most accidents happen. So please be careful, because this is looking very frothy. Rhythm Desai puts this up very well, not for the SME space, but for markets at large, that valuation as a single factor is never a reason for stocks to correct. Elevated valuations become a catalyst when other events unfold. And I think he's put out some in this India strategy note. He's mentioned, and I've seen Rhythm looking slightly worried for the first time. He's in some months or quarters. He says that potential growth slowdown for the first time since COVID-19, and he forecasts a couple of reasons. Of course, one key reason: state level profligacy causes a mix of state level spending to shift to redistribution, with concomitant risks to inflation. Effectively, money getting redistributed into revenue expenditure, freebies, etc., all of that, which poses risk to inflation as one key risk amongst others that you need to watch out for, coupled with valuations. Okay, now let's move to stocks and what should watch out for. So I believe the oil sensitives will be in play today. So HPCL, Asian Paints, BPCL, IOC, Berger Paints, etc. could all be in focus. Could be interesting on the upside. ONGC could be down. So watch out for crude sensitives. MK has come out with this lovely note. Niraj Shah of MK has put out a note called Oily Moily, and he says that companies with low integration to see leverage to earnings from lower crude prices, especially stocks like HPCL from their coverage universe. So watch out for OMCs. I would have not used defense as the second leg ahead of OMCs and others, but crude fells, and therefore use that, because the big news of the day is defense, or big news of the last 24 hours is defense, because the Defense Acquisition Council has approved 10 proposals worth 1.45 lakh crores. This is huge. The future-ready combat vehicles, air defense, fire control radars, amongst others, have gotten the nod. And market men seem to suggest that stocks like HAL, BEL, L&T, Bharat Forge could all see benefits. But I think across the gamut, you will see some upside. So even conglomerates, Mahindras, Adanis, etc., might come into play. Smaller plays like Paran's Defense might come into play. Usually the rising tide carries all boats. So watch out for this. And GIC could be interesting. And we'll talk about this in detail on TV a bit later on. But the news for the moment is that the government is going to sell up to 6.8% stake via an OFS. It's priced at about a 6% discount to the current market price at 395, floor price. Watch out for this one, you may see a bit of a downtick. What else? Let's move on. NHPC has signed an MOU with Maharashtra Department of Water Resources. This is a big one because they're going to set up pump storage projects and renewable energy projects of 7,350 megawatts. This is humongous for NHPC's size. Watch out for this one. Could be a big stock mover in the session today. On the upside, I would reckon. This, despite a bleak market outlook, by the way. So watch out for that one. Or despite a weak market outlook, not bleak really. AU Small Finance Bank is interesting. Submitted application to RBI seeking approval for transition to universal bank. Now, one, this move. Two, yesterday there was a clean out trade. A large block trade happened. The last of the sellers sold out, and therefore, I think this could be interesting. On a normal day, this might have seen an uptick. So watch out for this one. Then brokerage nodes. Azad Engineering is interesting. Since defense is in focus, aerospace is in focus. Investec has initiated a buy rating. Target price of 1850 versus current price of 1507. So they say strong foundation for multi-year growth has been laid out. They also say that they foresee a 40% PAT CAGR over FY24 to 27. But by the way, they see a 22% upside because the stock is also expensive. Mind you, this is a very expensive stock. So be careful. Study it properly. My colleagues will lay out the Investec note on our TV channel and our website. So you might want to read that before you get into it, but could be interesting. On the flip side, chemicals, a cautionary note from Morgan Stanley. They say they've downgraded Aarti to underweight, upgraded PI to equal weight. They say they prefer Deepak Nitrite. So these are 2 or 3 names, but effectively they are saying that the volume traction is at subpar price points in competitive landscape. They say the earnings are not fully de-risked as yet, and upgrades are still some time away. So there is some problem with chemicals. You know, I was constructive on chemicals about a month and a half ago, but some of the segments, dyes and pigments, etc., not looking very good. They prefer commodity chemical plays with triggers less levered to industry rebound, I think, which is why they probably look at a Deepak Nitrite or some others. So that's very interesting to watch out for. Just lastly, before we wrap up, watch out for this. Gala Precision Engineering. IPOs are a hot space. This one has been subscribed 52 times already on day 2 with HNIs leading the way. So maybe if you are looking for flip trades into the IPO markets, I don't recommend that usually, but this could be an interesting one simply because of the subscription, though no one knows what will happen. Thanks so much for tuning into the trade setup. Yes, we'll start off weak, but be mindful this is a buy on dips market. It's not necessarily sell at every downtick. Be mindful of that.